What's all this business about Goldbach levels?
Within 5 minutes, I'm going to teach you the biggest ICT trading hack that you can quickly implement into your trading to understand the higher time frame narrative. This is Euro USD on the weekly time frame. And let's try to understand where we currently are in terms of price action. Okay, because we've been on this strong uptrend. So are we going higher? This smart money technique will very quickly show you exactly how to read price action. Let's have a look at some key levels. This is the end of 2022. This is the beginning of 2022. Okay, this is the correct dealing range that price is operating in. This is the high of 2022. This is the low of 2022. Okay, once you understand that we are operating within this dealing range, price makes a lot of sense. Okay, as you know, I'm an expert in Goldbach trading. If you have no idea what Goldbach is and you want more information on how mathematics is used by the market makers to price every single dealing range and all the associated order blocks, fair value gaps, and so forth, click the video in the top right hand corner. And if you want to learn more about Goldbach from the inventor of Goldbach, there's a link to his book in the description to this video. So you can see now that we have the discount of the range, the premium of the range, and we are operating in the premium. But we want more information than that, right? We want to use mathematics as per Goldbach to understand exactly what price is doing. For that, you use a IPDA fib. Screenshot these settings. Okay, this is a powerful piece of mathematics that you can apply to your own trading. You do not need the extensions for now. If you would like to learn more about the extensions, you can have a look at some of my other videos. So this basically tells you for a dealing range, where will the PDAs form? Okay, the premium discounter range. This is the high of the dealing range. This is equilibrium. This is the low. The order block will form here. This is the order block level. This is the fair value gap. This is the liquidity void. Breaker block, mitigation block, bullish mitigation block, bullish breaker, bullish liquidity void, bullish fair value gap, bullish order block, bullish rejection block. Okay, what do we have in the fair value gap partition? Rejection block, order block, fair value gap partition. We have a gap. Okay, we have a gap in the right place. What did price do? It retreated up to fill this gap, which is in the fair value gap partition. This was the reason for this move higher. We have been in a premium. We've been consolidating in a premium. So what do you expect price to do? Right? We need some kind of completion of the algorithm. Now, if you're not aware of the algorithms, there's Algo 1 and Algo 2. If you want a complete description of Algo 2, click the video in the top right hand corner. But Algo 2 essentially goes, we go from the high, we go down to the breaker block, or it can be any point which is X. We retrace back to the fair value gap level, and then we complete the algorithm at the opposing order block. This is the rejection block. So this is exactly what we did. Order block, liquidity void, breaker block, retrace down to the breaker block, partially filled the fair value gap, slight consolidation at EQ, finished at the opposing order block, and then we reversed. What does the algorithm need to do to get out of this consolidation? Look for a run of the highs. Run the high, and then we'll have either an Algo 1 or an Algo 2 on the way down. All the algorithm is currently doing is running the stops in the premium of the range. Generate liquidity, capture liquidity. Generate liquidity, capture liquidity. Okay? Generating all these highs. Essentially, we are going to run the highs and we will kick off an Algo 1 or an Algo 2 all the way down back to the lows. Once you understand what the true dealing range is and you use Goldbach to ascertain the true price discount arrays, you can understand any price action. If you're trading, you want to be shorting in the premium of the premium. You don't want to be buying in the premium of the premium. You want to be shorting here, wait for the run of these highs before we crash back down. If you would like to learn more about my time and price golden bullet strategy, which I use for Forex, crypto, oil, silver, gold, and the index futures, there's a link to my mentorship below.